Okay. Well, what's up, everyone? I'm gonna be going over my trading style. Some of the things that I'm going to be discussing is going to be things that a lot of you, maybe analysts and traders, will not agree with. I did tweak some things up to my trading plan, and I've been using this trading style for the past year and a half now. Before, when I first started, I was using everything possible, indicators, trend lines, patterns, lines, supply, demand, everything you could possibly think of. Like, I've been through different types of trading styles, scalping, swinging, and after multiple uh, trial and errors and different ways, like I found that the best way for me is high time frame swings and supply demand along with support resistance. Um, so I use these in confluence with each other, and then like other confluences such as like patterns, and um, I don't use any indicators at all on my charts. You will not see me use any indicators. I don't like them. They're just noise, in my opinion. Again, it'll be different for everyone. Um, so I'm just going to be going over supply and demand zones. Uh, Order blocks are also a type of supply and demand zone. Bearish order blocks are supplies, and then uh, bullish are demand zones. I will not. I'll talk briefly about support resistance since I do use confluence with them, but Magoo is going to be going over um, support and resistance in much more detail on Saturday. But so let's go ahead and get started. But before we do, I want you guys to know what the definition, or what my definition of a supply and demand zone is. So I'm going to draw it here for you guys. So a demand zone, and I'll show examples here, but a demand zone for me and my definition is this, is an upwards movement, consolidation, and then break up, right? This is going to be your demand zone, and I'll go into more detail of why this is important. My supply zone is downward movement, consolidation, and then down. This is your supply zone. Now you can have, and I'll show an example of a different type of supply zone and demand zone. Those will be called order blocks. I don't really use order blocks. I look for more of this. But you can have something that goes like this, consolidates, and then barts back down, right? Like you have this. But then when it goes back up here, a lot of people will still call this a supply zone. I do not. This is an order block. Order blocks are confusing because some people do use wicks. When I look for my consolidation areas and zones, I am looking for candle structure, right? So anything in this zone, I am looking for candles. I do take into account wicks, but I do not take into account like wicks that are like that high. I'll show you guys examples, but I just want you guys to know the basic definition of what I consider a supply and demand zone. So I do have a couple of coins here that we'll go over, and in it I'll show you how I will set my bids in the zones, where I will place my stop loss, and we'll go from there. So let's take a look at Seapool. I hate this coin, but since it's new, it does have a lot of areas of consolidation. Okay. So the first thing I do when I am looking for a coin is I am going to remove everything from the drawing. I want a clean graph. I don't want any noise or anything. Now, if you had drawn this before and you do have your support lines and resistances drawn out and they haven't been hit, you can keep them. But if you have bounces off of those lines, I say go ahead and start from scratch. So the first thing I do is I get the graph and I start on high time frame. Again, I'm a swing trader, so anything below an hour or an hour and 15 minutes, like I use those for scalps. I do not use them for swing trades. If you want to swing trade, use the 4 hour or the daily. But what I do is I pull up the daily and I start drawing my resistance lines. So I'm looking for areas of pretty strong resistance and support. So I will use the color red for resistance and I will use black for support, okay? So I'm going to be drawing that resistance line, clear resistance. We have not broken above it. We broke up, came down, and then failed to go up. We have that resistance, we came down, failed to reclaim it, broke below it, and failed to break up. So I'm looking for about 3 or 4 areas of strong resistance, and I'm going to be drawing that on my chart. So let's say I have these 3 for now. Right? You can draw as many as you want, but on a higher time frame, you are looking for the strongest points of resistance and support. So I have these 3 for now. Now let's look for support. Currently, these are the only 2 support lines. Okay, I'll look for, since this is a new coin, it doesn't have much data, but it does have the definitions of supply and demand zones. That's why I started off with this one. But I just want to use these for now. Okay. Once you have drawn your resistance and support lines, I am going to be looking for my supply and demand zones. Now, supply zones, again, you're going to be shorting them, and demand zones, you're going to be longing them. They are not going to exist on every single time frame, so there might not be any on the daily, but if you go to the 4 hour or the 2 hour, which I really like, the 2 hour, or the hour or the 15, you can spot them. Now, the lower the time frame you go, the weaker the zones are going to be. So that's why I start in the higher time frame, as they are going to be stronger areas. But if you're going to be a scalper, then you might use the hour or 15-minute to identify these zones. So my trading style requires a lot of patience. I will call a play out, and it could take days or weeks or sometimes a month to fill. I have the patience for it because I only trade 4 to 5 times a week, if not less. Sometimes I don't trade at all, but when you do perform with these zones, or at least take on my trading style, they do provide a nice bump. Like, you will get at least a 15 to 25% unleveraged move from these zones, and that's enough for me to be happy. I use less than 5 on a 5x leverage when I do these plays for myself. But when I'm scalping, obviously I'm going to use a little bit higher leverage. Again, in my opinion, leverage is irrelevant. It's all about position sizing. So you can have 50 coins on 5x and 50 coins on 50x. Your liquidation price will still be the same on 50 or 5x if you have the same amount of money in your wallet. Now, I set the same amount of money in your wallet. So like if you have $300, you do not want to use 50 coins on freaking like 50x. But it's going to be the same if you have 50 or if you're available to use 50 coins on 50x and 50 coins on 5x. I'll go over that more in detail a little later on, but let's look for these zones. So I'm going to be using blue boxes for demand zones and red boxes for supply zones. Okay, so we're going to draw, and these have filled, but I'm going to be using the replay function, and you'll see what I'm talking about. Okay, so let's use blue here. Currently on the daily, this has no demand zone. These have all been filled, but it does have supply zones. Oops. So let's use these two for example for now, and then I will add more as we go. So here, this coin started out, so like there's an area of consolidation here, like watch. The definition I gave you was up, area of consolidation, and then up, right? This went up here, and then came back down and briefly touched this zone, and then gave you another move up, right? So you got from this first tap here a 468% move. Again, like this is a new coin, so there's not enough, like not much data. So this was a strong support area as well. See how the zone is in confluence with the support line. So I'm looking for those two things, confluence with support and demand. So here is an example of a tap of this demand zone and then a huge boost up. Now, when I look for demand zones, how do I know a demand zone has been fulfilled and no longer a demand zone? In order for that to be fulfilled, you are looking for a 50% fill of this zone. What do I mean by that? Let's say like this is your zone, right? You are looking for 50% of that box to be tapped. So if the price goes up, right, and then comes back down, and then goes back up, just like what happened here, that is not 50%. So this demand zone is still valid. It can continue to go up and then come back down, and then you're looking for 50% of this box to be filled, and then you'll get a bounce. Now this demand zone is considered fulfilled and no longer valid to my definition. Once a demand zone is no longer valid anymore, you can use your support lines still. Like I would use support lines after that. However, a lot of analysts and people do not agree with me because they will still consider this a demand zone. However, I do not. So I'll give you an example here, right? Let me go ahead and remove this. So for example, let's go ahead and replay. So let's say this is where we are in time, right? We're going to go up. There has to be a sufficient gap between the demand zone and the price action. So see how there's consolidation here? This has to go up. Like this is a good amount of, what is this, like a 30%, 50% move from the current price action of the consolidation wise. And then it just went up. So this is a good amount gap. You cannot have something where it's like this, consolidation, and then up like that and come back down. That's not a sufficient gap for this zone to be created. So this gap here is 60% up, and this is on a daily, right? So like on a lower time frame, you're gonna have much more candles, but 60% on this price action is decent gap for this zone to be created. Now if I remove all this, so price action is filling. So here's the first tap. We tapped that, and then we got a 42% move. We can continue to go, right? And then at the end, it was like what, a 468% move, right? Something like that. So this demand zone is still valid to my definition because 50% of it was not fulfilled. So you can milk this demand zone over and over again until 50% is filled, right? So like we haven't tapped the zone again. We'll keep going up. When do we touch it again? There. Zone was tapped again, and we got what? An 88% move. You better take profit when you have a 20 to 30% unleveraged move. I don't care if this is your baby or you want to keep holding coins. You better take profit. Like, price always comes back down. It might not be, within a couple of days, but eventually price always comes back down to strong demand and support areas. So, has this been filled 50%? No. So yes, you can still have bids here in this zone and try to milk this for profit, but you also have to understand that zones don't mean, or even though there's like a strong confluence with support and demand zones, it doesn't mean it's going to hold. Like, you have to understand the direction of Bitcoin, right? If Bitcoin dies, obviously supply zones or demand zones are going to get plastered through. And same thing with if Bitcoin does well and you have a supply zone like this, it could easily blast through. However, from my trading experience, they have an 80 to 85% win rate. So I'm going to continue to place my bids until um, I'm stopped out and milk the zone if it has not been fulfilled. So we tapped it here. We got a move up. We came back down, we tapped it here, got another move up. This zone hasn't been filled, so we're going to keep placing bids in this zone until we either get stopped or until the zone is completely fulfilled. So if I keep going, here is the zone being completely fulfilled. More than 50% of this zone has been touched, and if I keep going, we got a 106% move out of this from the bottom of the zone. Now, once a zone has been completely fulfilled, I will no longer put my bids in this area. I will now use my support and my support lines. Okay, I can keep going. That's the relevant data. Now, how do I place my bids in this zone? So I'm using a daily time frame, right? Like, there's not much data back here, so your support lines are going to be very, I guess, less than what they usually are on a coin that has a lot of data. What you can do is you can go into the 4 hour where there's a lot more candle structure, and you can place your support lines there. You're going to be placing your bids. How I do it is I have a 15, 30, so let me write this down. 15% at entry, 30 to 35% at DCA1, and then you have, 50 to 55% at DCA2. What does this mean? A DCA, for those that don't know, it means dollar cost average, right? So you're going to be having the lower amount of your bids at the entry You don't want to go all in. You do want to set, a heavier bids toward the bottom. So if they do fill, your average will be closer to the bottom than the top. Your heavier bids will be closer to the stop loss. So if I was taking this bid, so let me just draw my magical green and red lines, right? So let's say I'm going to have my beginning bids at this top of the zone here. So I will have, well, let's use this black line, right? I will have 15% at this line here. And 15% of the capital that I am allowing myself to go into the trade with. So if your wallet is at, let's say, $1,000 and you want to use a total of $100, let's say, in the trade, then you are going to go into the trade with 15% of the $100 that you're setting yourself up for this trade. Now it could be, like $100 margin or whatever you want to do. You just have to calculate 15% of however much you want to use. So I will use 15% there. And then since there's not enough data for me to put, my lines of where I want to set my first DCA, I'm going to go on a lower time frame and I'm going to look for support. And the support is only based on this data here, right? Because there's nothing here. So you have your first bids here. Let's say you want to use like this as your second DCA, right? So you're going to be using 30 to 35% of your remaining capital in the trade at this bid here. Now, why is this important, right? Well, before I explain that, let's just look for the last bid. And the last bid that I'm going to be using is always at the end of the demand zone, right? So there, I'm going to be using 50 to 55%. That's how my bits are going to be scattered. Okay. Sorry, if I keep, increasing the size, this is going to get bigger, but hopefully you guys understand how I'm setting my bids. But I'm going to go on a daily time frame now. So we have that there, right? Now let's look at this. The entry is going to be the top of the demand zone, right? We have our bids set. We predetermined where we want to place them. And now stop loss placement. Stop loss will be at the bottom of this demand zone. You can place it a little higher up if you want, but look, 34% risk is way too much, but that's because this is a relatively new coin. I'll show you more about risk on a coin that's been established and has data, and we'll calculate that together. But this is just an example of how you'll place your stop loss. The stop loss will be below this wick here, right? That's how you'll place it. So in this example here, if we do it again, like I'm not going to replay it, but we had an area of consolidation and we blasted up. We came back and only 15% of our bids filled. We didn't get a DCA on the first tap, which is fine. You'll never want to average up, right? You're just going to ride it. Now, where do you take profit? You'll just draw, like this is new data. So over here, the only way you would determine where you're taking profit is drawing fibs, right? Like I'm not gonna draw fibs because that's a whole different lesson. But this is a new coin. So if a coin's in price discovery, you'll use fibs. Otherwise, you're just gonna be drawing resistances, and you'll be taking profit at each resistance. But in this case, only 15% of our bids filled. That's fine. We're going to be writing it out. You'll take profit along the way up. And as soon as a take profit hits, so if your first take profit hits, you're going to place your stop loss at break even. If the second take profit hits, you're going to move the stop loss and break even to your first take profit point. And you're just going to be scaling it up as it goes. Again, don't worry if you're taking profit aggressively. Like when you have a market such as current, right? Like you have chop, you want to take profit aggressively. It's okay if you're stopped out, but don't move your stop loss too early. Like if you trim, don't move your stop loss to break even early. You want to give yourself breathing room because that's why you have your DCAs set up, right? Like you have a margin of error. So in this case, only 15% filled. That's fine. We're just going to write it out. And then let's say it came back down here, right? In this second tap here. Now where I placed my DCA, this one did not fill my second DCA either, right? It missed by a hair. Story of my life. So you'll just write out that 15%. If you want to add more to your position, do so when a support or a resistance has been flipped to support. So for example, let's say you have all of this data here, this tapped, now you have data, you have a resistance point here, right? It failed to go above and hold, right? It broke resistance, but it failed to turn it to support. So if it had turned it to support here and continued up, you could have added at 58 cents. But because it didn't, there's no point of adding. Now you're just increasing your average up, and when it comes back down, you're giving away profits. So only average up when a resistance has been turned to support. Now, we got what was the second tap? We got like, what, 77% move? Yeah, about a 70% move because our second DCA did not fill, right? Then we got this third tap. It filled our first, second, and third DCA, right? So your 15, 30, 35, 50, all positions have been filled. Why is this significant, right? Why do I use these numbers? So if you had used 15 here or 15 here, let's make it easier. Let's say you use only 50% at your entry and 50% at your first DCA. You don't have a second DCA. Now your average entry is going to be flat in the middle, right? That's your entry. But if you use this method, and you can use whatever you want. Like I've just been using these numbers for a while. Now, if you had to use 15 here and 15 at your first DCA, you'll have an average of whatever, the middle of these two numbers are. But because you're using more, your average is going to be like closer to the first DCA point. So let's say this blue line is your current average once this has filled, right? And then now you have this filling, so your average is now going to be closer to like there, closer to your stop loss than your entry. That's why we place our heavier bids at the bottom, and we don't always want them to fill, right? Because it could easily burst through the demand zone or supply zone and then hit your stop loss. So you have to, take into account the risk and how much you're going to be losing if a stop loss hits. But if the DCA bids are closer to the stop loss, then and I'll show you a different example, but this last bid filling shouldn't make that huge of a dent in your loss to your portfolio, right? So in this example, we have all three bids filling, and let's say this blue line is now our average. You just got yourself an 80% move. This bid or this zone is now no longer valid. How do you tackle this now? If the zone is no longer valid and 50% of it has been filled, you're going to remove your zone, and now you're just going to be using your support lines. So this one has because it's a daily, right? It has no data here, so you'll have to go on a 4-hour to find your support. So currently this black line, 0.399, is a decent support, right? Bounce, bounce, bounce. So you'll just be using support lines now. That would be a full play on a demand zone and it being completely fulfilled. So just to recap, zone, we are looking for an area of consolidation after an impulse up and then breakout. You need this breakout to happen for a zone to be created. You cannot have it be something like zone, like this consolidation, and then this, let's say this candle didn't exist. Actually, I can do that. Let's remove this candle. Oops. You can't have price action after this candle be this, right? Like this is your new candle, and it comes back down. That is not a sufficient gap. You need a good amount of gap. That is a gap for this zone to be created. Now I suggest not looking for zones on illiquid coins because those rarely work. I have a list of all the coins I do not trade in my golden nuggets section. It's pinned, so look at that. I only trade, top 50 coins because they have volume and a lot of data. I'm not going to trade like BR, ZX, or whatever, all that crap. So I'm looking for coins that have a good amount of volume and data. So here was a example of a demand zone being traded. I'll show you more on different coins, but now let's look at a supply zone. But before I do that, I'm just going to remove these lines for now. Now, another demand zone here, right? You can use this one. Now, this is a much more prominent demand zone on a lower time frame. Oops. So you have an upwards movement consolidation. Yes, you can bring this down if you want. This zone is just now, a 20% zone, which is fine. Just minimize your risks, okay? Like you don't want that big of a zone. You can use this one if you want. Like, here's a better one. And both of these did their jobs, right? So let's use this one first. You have upwards movement, consolidation, upwards movement. A sufficient gap has been created. You have all of this as your gap, right? It never comes back down until here. So 50% of this has been fulfilled. This zone is no longer valid. See, it falls through. But if you had bids here, that's a good support area. Like if you had drawn your lines, right? Like let's say you put it there, maybe a little lower. And you had your bids up here at the top of the zone. And then your last bids at the bottom. you would play this like stop loss under that low wick entry. And then now you have data here for resistance. You know, like you're gonna take your first there. Maybe another one there. You can place another one like there, for example, right? So you have area consolidation up, and it comes back down and touches here, right? So let's say you have your first bid 15% there, second bid 30-35% there. Your average is now closer to the first DCA point. What are you going to get out of this? You're going to get, let's say like this is your average, a 28% move. Now that's usually what you get on a higher time frame. You'll get about 15 to 25%, right? But you're getting a 28% unleveraged move, right? So if you're using 20x, congrats, you just made almost 530%, a little bit more actually, 560. Just playing this demand zone. Now, because 50% of this has filled, right? I am no longer going to be calling this a demand zone, so I'm going to be removing that. You can keep your support lines because they're still valid, right? Like if this came back down here, touched it, and then gave you a nice bump, right? Like support lines will still hold, but the demand zone has been fulfilled and no longer there, right? Why did I use the stop loss placement here? It's below this low wick. If I add the zone back in, it's under my box and below that wick. So we're going to go ahead and remove the box. And now we're going to take a look at this one, right? You have an upwards movement, consolidation, upwards movement, and then a sufficient gap has been created. It hasn't been touched until here. You had your first bids here. You got a 7% move. How would you have played this? Bids here, stop loss under this wick maybe, but that's too big of a risk, 10%. I'm just going to keep it small and have 6% there. I'll place it under this candle. I got a nice 7% bump. It wasn't 50%, but then we're going to have to take a look back and see what happened on November 23rd for this to drop so much. Did Bitcoin, take a hit? If so, like it's obviously going to blast through your zones. But also, there's only like one 4-hour candle consolidating here, right? Like it's not like this here where it had multiple days of consolidation. This is just a 4-hour candle before an upwards movement. So this also tells me that this zone was not strong enough. Now, if you look at it on a 2-hour interval or like a 1-hour interval, yes, you're going to have more candles consolidating, but the lower time frame you get, the zones are going to be weaker. So you want a good amount of consolidation from your candles, right? So yeah, we still got a brief 7% move, right? You can, and if it was me, yes, I would have tried to milk it for more, but I would have gotten stopped on this move back down, and I would most likely have given up my gains. It's a 6% risk, right? I made 7% on this move. Yeah, I'm still net positive, sure, but I would have been stopped. And there's nothing you can do. Like, you'll have to take a look at Bitcoin to see if this was a significant day for the drop. And this goes for every single coin. Like, when you have your zones and a play set up, you want to see what Bitcoin is doing that day. Does it look bearish? Obviously, you can't stop FUD coming out um, like that big wick and sell off that we had on December 5th, and I'll show you that on another play. But it's something like that happens, and there's nothing you can do. Like it's gonna burst through all of your zones, all of your lines, and it's just a unfortunate event. But like 3 examples, we've gotten a nice move out of them. I'll take a 7% unleveraged move any day. And yeah, so that's your demand zones. I'm going to now look at supply zones. So again, supply zones, to my definition, is downwards movement, consolidation, downwards movement. This is your supply. Granted, a nice gap has to be created, right? Same as a demand zone, and not retested. So if we're looking at this isn't a great example, again, because it's a new coin, right? But I'll draw a couple. And this is where the order blocks come in. You can use the wicks, right? I typically do not. I like my candles. But I'm going to use the wicks here and call this a bearish order block. Let's look at this one, for example, right? You have, let's remove these. You have downwards movement, consolidation, downwards movement, right? Is this a big enough gap? 20%? Sure. It's a new coin. 20% is a lot, right? So yeah, that's a pretty enough gap. How do you take this? Same thing. We'll use the 15, 30, 35, and 50 concept this whole entire presentation. Okay. So how do you take this? I don't want to confuse you guys with the red and black, but now that we're playing this, I'm going to use black as my entry. So this black is in confluence, right? Like we lost this. This becomes resistance. Can we break above it now? We came down, held it, right? Went back up, came down, held it, went back up, but this time we were unsuccessful on holding it. So this would be an SR. We lost this support line, so we could reject from it. How are we going to place our bids? Again, not enough data here, so we're going to look at a 4-hour. So 15% will be at the entry, and we're shorting this, right? Because it's a supply zone. So 15% here. Maybe we'll use that as a DCA, and then the last one will be at the end or top if you're looking at it a supply zone. Now we're shorting, so entry will be here, and your stop will be above the wicks. Right, like we had break here, and this. So back on a daily. Yeah, this coin sucks. So we have consolidation, right? We broke it. We've created, I'm gonna remove these. We've created a sufficient gap, so we're gonna play this supply zone. You have 15% at entry. You have 30-35% here, and then you'll have your heaviest bids closer to the supply zone. right? So we came down, went back up, touched it, it filled, your second one filled, and your third one just missed, right? So now your average will probably be closer to here. We'll use the blue line, right? And then you're just gonna pick, take profits. These will, when you're shorting something, your take profits are gonna be areas of support. So you'll look for support areas. Um, I'd use a 4 hour so you have better, more data. So let's just say we use this and let's say that, right? Now it went back up and filled your first DCA. So your average is this blue line. Look at this. We went down 67%. You took profits here, you took profits here. Once this take profit hits, you're going to move your stop loss to your break even price. And it never hit it again, right? Then it went to hit TP2. Now you're going to move your stop loss to your TP1. It never hit it again. And then it just kept going down, right? So that's the supply zone that was successful. And 50% of it filled. So now this is no longer a supply zone to my definition. So I will remove that box, but I will keep my lines here because these are still valid, right? And then we came back down here and we created this supply zone. 2 candles, so it's not going to be a strong one, but it's still there, right? It has not been tested yet. You can't short this, obviously, it's C-pool, but it's an example, right? So this hasn't been tested. We briefly got there, kind of, but then went down. So it's the same concept, just flipped, okay? Um, everything still stays the same. The way you bid will stay the same. Once a box has been fulfilled, you're going to remove it, leave your lines unless they're completely gone. Like if we, let's say we go back up like this, right? Like, yeah, you can create new lines and remove these, but for the time being, you're just going to keep these lines. So that would be a supply zone. This one hasn't been filled. There is no other supply zone on a daily. So if you go to like a 4 hour, is there one? Possibly. Oops. Like you can have 2 candles here, not strong, but hasn't been tested. Maybe we can call that one. It's consolidation within the zone. It's not clean, but yes, you can call this a zone. You'll place your stop loss above this wick, right? So the lower time frame you'll go, if the higher time frame doesn't have one, yes, you can still spot one on the lower time frame. However, again, remember, the more low time frame you go, the weaker the zones get. So that's why I always start on the daily. If I can't find one, then I go lower and lower. Um, if I'm going to be using a 15 or a 1 hour, then I'm looking for a quick scalp. Like by quick, I mean like it could be like a 5 minute or 10 minute scalp. Do not rely on zones that are within the 15 minute or the hour. If you're looking at anything below a 15 minute, it's garbage. It's noise. Throw it out unless you're a god tier scalper. But that's an example of demand and supply zone. Um, I'll show you more on a coin that has much more data. So let's look at Atom. Where did my data go? Okay. So I drew some earlier, right? But the first thing I want to do is I'm going to clean my chart up. So I'm going to remove everything off of it, and I'm going to draw my lines, right? So we can draw, let's draw some red as resistance. Let's come down here. Let's just use that for now. And then we're just going to draw our support lines. You know, you can go further down if you want, but I'm just drawing it closer to current price action. But support, 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 bounce. So I'm going to use that. Now again, you can have as much lines as you want, but on the higher time frame, you should have only the strong ones. So that's why I have so minimal lines drawn right now. Now we're going to be looking for demand and supply zones. Oops. Blue is demand. And I'll go over all these examples. Okay, so I've drawn a little bit of demand zones, and then you obviously have some here, right? Like I can draw this. Oops. This hasn't been touched yet, right? But I'm just going to be focusing on this. So let's draw demand zones first. I won't confuse you by drawing supply zones. So let's take this back and let's go to here. So let's say we're here in time, right? We're going to build candles. There's our price action. We have now on the daily consolidation after an impulse up and then impulse up, right? This impulse up here has created a sufficient gap. It keeps on going and it hasn't been tested yet. So a demand zone has been created, right? Gonna keep going. There's the first tap of the demand zone. Let's just keep going. That first tap, before I calculate it, how do we take this play? 15% at the top of the zone. I'm just going to remove these. Actually, in this example, we will use the color blue as our entry points. So let's use blue. That's our first entry point. To get more DCA entries, I'm going to go on a lower time frame to see more candle structure and data, right? Now what I can do is, has this been, there's data structure here. So let's use this resistance, resistance. We broke above, so let's use that as a DCA point. I'm going to draw this. Let's see which one's better. that one works. This middle one, it was resistance, resistance. Yep, all of these points are valid. However, I only DCA twice, so my trading style, I'll have one at the bottom. You can delete one of these, right? Let's just delete this one, for example. It doesn't matter which one I deleted. They're both valid. I verified it's in confluence. So how would I take this play? Let's go back on the daily. Entry, top of the zone, stop loss. You can place it under the lowest wick. Notice that's 12% risk. If you place it there, that's a 10% risk. Does that 2% matter to you? Will it cause a huge dent in your wallet? If so, stick with the 10, right? I would take it like that. So in this example, now you can draw this up as much as you want. Just make sure you have your resistance points drawn out, and those will be your TPs. So first tap, entry filled, DCA 1 filled. We got a 39% move, right? Is 50% of this been fulfilled? No. So you can try milking this still. Let's go candle structure. Obviously, this one higher, 55% or 54% move. So come back down. Okay, there's the second tap. 50% has been filled here, right? If you had played this the same exact way, your first entry in DCA has been filled. This move, let's see if I keep going. This move gave you a 17% move unleveraged, right, in the second tap. However, once 50% has been filled, this is no longer valid. So I'm going to be removing this. Look what happened on the third after it was filled. We came back down and blew through it, right? It blew through support. This is around the same time frame with that whole C-pool incident. What happened? Bitcoin probably died. So that's why I remove it after 50% has been filled. It's no longer valid. I milked it twice. I got a 55% move the first time and a 17% move the second time. I'm happy with that. So this is no longer valid. You can leave your support lines. Again, this is a daily, right? So the support line here held. It blew through these. These were 4-hour support lines. But the daily held, right? So this zone is gone. Now let's speed it up and get to this zone. Upwards movement, consolidation. This one would have been stopped out. How? I would have placed, well, based on this, right, there's no, and not enough candle structure and data here to do it, so you'll have to go on a 4-hour. Place your stop loss probably under there. So this one went up. Now see, on a 4-hour, if you had drawn your lines, let's say like use this as support, the top of the zone is your entry, blue, first DCA, right? entry filled, DCA 1 filled, and then you got a brief relief. 6% before it collapsed, right? You would have been stopped out here. On a daily, you would have been stopped out. How much was the risk? 8%. So they don't always, support zones aren't always sunshine and rainbows. You'll get stopped out eventually, but I take the risk 100% of the time. They've worked out so far. That was our first stop, right? So let's remove that. This zone is no longer valid. It's been broken. Let's go to this one here. I'm going back on the daily. Okay. Got some pretty gnarly wicks here. We have upwards movement, a little bit of consolidation. It's a 1-day consolidation in this zone, but it went up and created a sufficient gap from the breakout. 20% move. I call that a nice gap. And then if you were playing this zone, bids here. I'd look at more at a 4-hour to place my bids on support, right? So let's say there and there. It went up, came back down, filled entry, and your first DCA barely missed your last one. So let's say your entry is now closer to your first DCA point, and then you got a 24% pump before it comes back down. However, 50% was filled here, so this is no longer a valid demand zone. I wouldn't play this again. I got a 25% pump. I'll take it. You can keep your support lines, right? You can play support and resistance now, but you won't play that demand zone. And that was the 3 zones that we had drawn out. This zone here has not been filled yet. $12. Will we get it? Eventually. I wouldn't set bids right there right now, but we could get it when Bitcoin goes down to, say, 20K. If that happens, you could have a giant wick into it and go up. So that's just an untapped demand zone for now, right? Now a supply zone here. You don't per se have a supply zone, but you have this OB, a bearish order block, which is a type of supply zone. Right? Like if you had played this one giant one, you could have played it 1, 2, 3, 4 times. However, this filled to it's not a supply zone, so my definition doesn't apply here because I only play those. But this OB, you could play it however you want. If you had played it like this, bottom of here, with your stop above the wick, you could have milked it, down however many times. Let's say your average is there, 1. That's 1. 22% move. Actually went lower. 29. Then it came back up, went down 52%. It came back up here, went down 23%. Right? It has failed. It has failed to break this bearish OB. It's not a supply zone to my definition, right? Because my definition is what again? It's downwards movement, consolidation, downwards movement. We have upwards movement, no consolidation here, downwards movement. Upwards, no consolidation, downwards. So this is not a supply zone in Arsh's trading style. So, but there are supply zones here, right? Where was a supply zone? Maybe not on, oh here. Right? We have downwards movement, consolidation, downwards movement. We've created a sufficient gap, right? Go ahead and place your bids in this zone. First one would be at the bottom. You can middle and then top. You would play this like this with your stop above this wick. We went down, came back up, right? Filled probably your first DCA and went back down. You got a nice 33% move from the bottom here if you didn't sell. And then you could have played it again. However, because 50% of this box had filled, I would have removed this zone. And I could have played it, like for example, let's say I placed bids, right? Like you had your first one here, second one probably here, right? There's a support area, went up, broke it, came back down, bounced off of it. So I'm going to place that resistance point because it broke down and never failed to break above, right? So if your box is removed because this candle here fulfilled it, you can still play a resistance short, right? So that's why I use those two in confluence with each other. If the zone is no longer valid, I'll use my resistance and I'll play that way. I have no indicators, I have no EMAs, nothing. No volume, nothing. But then over here, you know, like you have your falling wedge, right? I'm not drawing it perfect. And then you have an OB, bullish OB, tapped it perfectly. Could you have drawn support lines here? Let's see. Resistance before, resistance failed to turn to support, and then broke above it, held it here, came back down, went up, bounced here, you know, so like it bounced here again, so that's going to be a support line, right? So it's in confluence. Yeah, it wicked down, sure. It's still an OB. And then you got another confluence in your falling wedge, right? And you got a nice move up. So you have 3 confluences now. So that's another example of demand and supply zone on that. I'll show you one more coin. King OG here. And I want to show you this example. So I had drawn, back in my Insight channel, I drew this back in December. Actually, it was November. And we were here. We didn't have all this data. We were here. Actually, no, sorry. We were here because I had drawn the trend line. And from here, I saw two things. I saw this demand zone, and I had seen this demand zone. I saw that we were going up. We were, creating this rising wedge. So I could tell that we were going to dump. And my areas of interest were playing these. And I actually did call longs on both of these, except for this one. And thank God I did not. I'll show you why. So let's say we're here, right? We're going to set bids. Let's say like that, right? Stop loss be below that wick. Entry top of the zone. I'm using the candle, not this wick, as my entry. And then, you're going to be plotting resistance points where, let's just say, now, like if you're scalping this, you're obviously going to use a lower time frame to take profits, but I'm just drawing my resistance points based on the daily, okay? So, we're using these two demand zones. Let's speed this up. Damn it. Okay. We're going up. We reject off the top trend line. Breakdown, right? If I had actually drawn this correctly and used that wick, you would have tapped the top. But my drawings suck right now. I actually called this long at 55, like 500. My chart's just drawn terribly right now, so I'm sorry for that. Let me draw this correctly. So I'm bringing this up to here because that's where we rejected. I'm taking this down to this line right there. Okay. So we touched the top of this zone. Not everyone would have been filled. Liquidity issues, right? But if you had played that, if you were lucky to get filled, then your 15% would have filled, and you would have gotten what? An 8% pump. Is that it? Yeah. 8% pump. This is still valid. 50% of it has not been fulfilled. We came back down, touched it again. And then we pumped 7%. 7% is a lot for Bitcoin, right? Then we came back, third time, we filled entry. First DCA, missed the last one, missed our stop loss. This one could have stopped us out, maybe not, probably did, right? But we went back up on the third tap. your entry would actually be closer to that. 9%. Right, like obviously like I just drew this based on this, but I'm gonna use a lower time frame to correctly place my stop. I just drew this as fast as I could, but the whole concept is it's gonna be below this. I would have actually looked back here, probably placed it below this one, right? But after we got this third tap and we fulfilled more than 50% of this box, this is no longer a valid zone. You'll keep your lines there, right? Because those are still support lines, but your zone is no longer valid. The first time it hit your first TP, second TP. You could have milked it the second time, hit your first TP and your second TP. And your third time, it would have milked first and all the second as well. And then it died. But I had removed it, right? So like I would have not milked that play. This zone got destroyed. And that was that day that we had that major FUD. It happens. Like when you have FUD in the market, obviously it's going to destroy your zones and your supports. Nothing you can do about it. Luckily I didn't call that one. Right? So there's an example of another zone being tapped 3 times and milked as much as it could before it was fulfilled. Right? Supply zone. Well, before I do that, here is why everyone thinks 29K is a prominent level and also 25K. There is a demand zone that has not been touched. Eventually it's going to fill. We also have a brief small one there. Hasn't been filled. That's 28K. This is more prominent. There's more consolidation. This is not a demand zone. This is a downwards movement. This is an OB. That's the difference. My definition is upwards movement consolidation, not downwards movement. Right? So on a 4-hour, do we see any demand zones? Nope. Do we see any supply zones? This is not a supply zone. We have upwards movement, consolidation, downwards movement. This is an order block. Same with here. Order block. We went down, up, then down. Let's go on a lower time frame. What do we see? upwards movement, consolidation, if I draw my lines correctly. So upwards movement, consolidation, sufficient gap has been created. Now Bitcoin, you know, like this is a scalp, a 2 hour, right? So a small movement like what? A $1,000 move is enough. You have your bids. You'll go back and see like what areas you want to bid at, support. I would use a lower time frame here so you get more data. Support, and then you'll have your last one at the bottom. Stop loss below that wick. You can place it there if you want, but I'm going to use this one since I used the top of the candle here. But also you want to make sure you're not placing your stop loss on a support line, right? Like watch. That's a support. Support, support. So it makes sense for me to place my stop loss below that line, right? Just in case we get a bounce. I'll place it under these. So now what happened? You had upwards movement, first tap, you got 3.7% scalp. Not bad. The zone is still valid. 50% has not been fulfilled. Came back down, right? Your first DCA and your second DCA filled here. Your average entry will probably be closer to your stop loss. So like probably, let's just say there. All filled. And then we went back up to 39,250. You got a 7% move just milking this zone again. This zone is now no longer valid. 50% has been filled. Remove. We came back down, and you would have been stopped out if you tried to take it again. Your support line's held though. The support line kind of held. Yes, the wicks happened, but lines. So that's why I removed my zone after it was filled completely here. $2,000 move, 7%. I'll take it. We actually shorted the top of this. The short is posted in my inside channel. But that's another example of a demand zone on a lower time frame. Right, so this OB hasn't been tested yet. You can take a nice short scalp on it. You'd play it like probably like that, 2% move. And then you're just going to look for, areas of support to take your profit on. So like there. It's going to be a scalp, right? So you'll have to look back to see areas of support. And probably there. So those would be your TPs if you took this. 2% stop, not including DCA. your risk to reward is about 4.32. If you go here, it's about 2.89. Anything greater than 2.5 is good for me on a quick scalp. But again, that's an OB. See, it's not, you don't see that OB on a daily. That's why you're using a 2-hour. So that's, in a nutshell, how I go about my supply and demand zones. And once they've been fulfilled, I will use my support and resistance lines. That's how I trade. And yes, like it does take some patience. Like when I showed you guys this Bitcoin one right here, right? When we took this first, where is it? When we took this first one, right? How long did it take for this place to fill? Break up. 38 days. 45 to the whole entire setup. So you can look back at owner's chat. Like I called this play and I waited patiently for 45 days for it to fill. That's just my method. I'm a patient trader. Um, Again, my trading style and my patience level is probably. I know a lot of you guys will probably cancel the plays because you guys don't want to keep them open, but that's just how I trade. Um, but that's basically again in a nutshell how I trade. And use my support and my support lines in confluence with my demand zones. If I don't see any demand zones, I don't fret yourself up and try to find them. When in doubt, use your lines. Um, so a lot of my plays do go based on lines if I can't find any. So yeah, that's pretty much it. I will go ahead.